Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. Bitcoin's not really doing much this morning, but we have, some altcoins. Doge is doing okay, Emily? All right, well, taking a look at TradeBlock's indexes are now the CoinDesk indexes. So checking in on Bitcoin, the CoinDesk Bitcoin price XBX index right now is currently trading at about 54,000, just under $400 this morning. Bitcoin is down roughly 1.5% over the past 24 hours. And the CoinDesk Ether price ETX index is trading at 27.89. ETH is up about 2.4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, tell me a bit about your view on what is happening in the markets. We seem to be stuck in a range.
Well, yeah, we had the GDP numbers come out today. 6.4% annualized rate versus 6.5% expected, which isn't much of a difference. Quarter four of which is the last quarter, was 4.3%. And you look at these numbers and they're the highest since like the 1980s. But remember, we're coming off a pandemic. So you're not seeing much of a reaction in the crypto markets because everyone's kind of like, all right, well, we expected this. What's interesting to note is that ETH is up, continues to be up. It's building off the bullishness, particularly off of this JP Morgan note that came out a couple of days ago. Shout out to the guys in the hash. If you ever get a chance, watch yesterday's episode. It was quite interesting. And what they said was that JP Morgan says that Ether and Bitcoin have delevered. So Ether had a better rebound, though, because and that's a sign of better liquidity than it's had in the past. And given the way that the market is currently structured, leverage will have less of an effect on Ether compared to Bitcoin. And that's a healthy sign. Remember, ETH is up something like close to quadruple from January 1st. Bitcoin hasn't even totally doubled yet. It's like 80-something%. So ETH has been, for the past few months, the game to play in the markets.
Mm-hmm. And something that could help or hinder things is the Federal Reserve, which made their policy decision yesterday, their latest, saying that rates are going to be near zero. Emily, what are your thoughts?
Well, also interesting is that yesterday, Federal Reserve Jerome Powell said he made a comment pretty directly related to crypto, just acknowledging that the market is quite frothy, as exemplified by the coin that we love to talk about on the show, Dogecoin, and that this may be related to easy money policy. Governments all over the world have been printing money, and this has definitely had an impact on the crypto markets. So I think this is, this combined with Biden's speech talking about spending, I think crypto watchers are going to be paying a lot of attention to these government moves to see what the impact will be on cryptocurrency prices going forward.
Taking a look at government moves as well as corporate moves. Speaking of which, BNY Mellon, the world's largest custodian bank with over $40 trillion in assets under management, announcing in February they are moving into crypto by offering custody services for institutional clients. And it likely won't stop there. America's oldest bank is also eyeing lending and issuing digital assets like tokenized securities. And joining us now to discuss is BNY Mellon Global Director of Digital Assets and Blockchain, Lory Kehoe in Dublin. Welcome, Lory.
Good morning. Great to be here. Thanks for the opportunity.
Yes, absolutely. Great to have you here. So perhaps you can start by giving us an explainer of BNY's plans in the crypto space. What led to this decision and how has it been in the works?
Sure. And look, in many ways, the answer to that question is simple for us here at BNY Mellon, and that is that we are driven by client demands, client needs, and how best we can serve those. So 3 quick points to share is that the first point really being that over the last 12 and 18 months, we're seeing a material amount of interest in relation to digital assets from asset managers, from asset owners and corporates across all lines of business within the bank. So that really is a big factor for us to look at the area very seriously to ensure that we continue to meet our clients' evolving needs. The second point, I guess, is in relation to why BNY Mellon specifically. And a big part of that is our clients are looking for a trusted partner to go on their digital assets journey with. And they're choosing to, I guess, go with us. We've been in the banking game and custody game for over 200 years. So hopefully we're fitting that bill. I think another key point in relation to this as well is our focus on our risk principles and also in relation to our risk frameworks. And then another key point is our laser focus on regulation, which is absolutely critical in terms of what we do across the bank as a whole. Mm-hmm. And I think at a macro level, what I would say is that within BNY Mellon, our focus on digital assets is very much looking at digital assets as evolutionary rather than revolutionary.
Mm-hmm. So I wonder about the challenges in making that transition, because BNY is the oldest bank in America. It's based on older technology. How are you making, what are some of the challenges in making the transition?
Yeah, look, I think, you know, for any entity like us, moving into new areas takes a lot of consideration. I think what we're doing and what we're doing very well is we're being very thoughtful in everything that we do. So first and foremost, we listen to our clients, and then we look at our risk principles, risk frameworks, and we look at the regulation, and we move forward on a very deliberate basis. I
say that, Lory, just because there are people who work in banks who are very frustrated by the old and antiquated technology, and some suggest it needs to be torn down and rebuilt from scratch. Would you agree?
No, look, I think we have a lot of very strong technology platforms in the bank, which we're leveraging and we're building on top of. So it's not a case of throwing everything out and then bringing in a new system. I think, look, there are new technologies that we're looking at and that will integrate. So the way the bank looks at technology is very much on an ecosystem basis. What are the partners out there that have great technology that are in the digital asset ecosystem that we need to work with and integrate into our existing solutions to meet our clients' needs? So that's really the way we look at the evolving technology landscape in relation to digital assets.
Good morning. If you don't mind me asking sort of a more philosophical question here. So I'm sure you're familiar, the whole idea of cryptocurrency, right? Or the whole idea behind the Bitcoin white paper is to cut out the intermediary and to cut out the bank and to have like this kind of trustless interaction. And you actually use the word trust, but the idea is that you don't need a trusted third party in the cryptocurrency world. So why does cryptocurrency actually need a bank?
So, look, I think that's a very interesting point and a debate that, yeah, I think we'll probably rage on for some time. But really, what we're seeing is that our clients are looking to us as that trusted partner. They're not in a space where they want to operate without a bank, without an entity like BNY Mellon, which provides trust based on the reputation we've built over the last 200 years, based on our risk frameworks, based on the licenses that we have from a regulatory perspective. So I don't think we're at a stage where we're in a trustless world when it comes to digital assets just yet, and that there's value to be provided by BNY Mellon in this space.
So, Lory, good morning. What kind of data did you have that told you that clients really want this kind of crypto service from you? You said that there was they expressed interest, but were they surveyed? What made it? I know this happened prior to you arriving at BNY Mellon when they really started to get into it, but what was what were the data points that they received that said, okay, you know what, this is going to be a profitable line of business for us to get into?
Look, a great point. And what I would say to that is, I think, a number of years back, a client coming along and asking for, digital asset custody services was probably interesting a few years ago, but not a material opportunity or one at which, we can scale across different lines of businesses or for different clients. And I think the tipping point, or my understanding, the tipping point is really when you have C-suite folks getting in touch with our executive committee, who are some of our biggest clients across all different lines of business. It then becomes not a single voice, but that becomes a regular drumbeat of client interest in this area. and how do we work together to provide solutions for our clients in this space.
So
what have been some of the biggest pain points in making this transition? Like where have the biggest challenges been?
What would I say? Look, I think from perhaps a vague opportunity a number of years ago, and not, I don't mean to repeat myself, but the focus on client demand has really brought this to the top of the house, and then it has resulted in the announcement on February 11th and the creation of the digital assets unit. But I think there's a range of opportunities for the bank in this area. I think looking at some of the challenges, I think, it's looking at it from a technology perspective. How do we bring in cutting edge technology in relation to digital assets, but also looking at very practical elements around risk and compliance and regulation. We need to constantly and consistently be very mindful of those areas. We may want to run faster, but however, we need to really take stock of the checks and balances in order to provide the services that we're going to bring to our clients in the US and around the world.
So, Lory, this stuff was announced back in February in crypto. That was a lifetime ago. To see services coming out from BNY Mellon.
Forgive me, there was just a slight lag there, Lawrence.
So this stuff was announced back in February. That's quite a long time in the crypto space. How long will it be before we see these products and services come out from BNY Mellon?
Yeah, absolutely. Look, our focus at the moment is on digital asset custody, which will be provided by the end of the year. And that's the time frame that we're working towards, naturally pending regulatory approval as well. But we are absolutely laser focused on getting that service up and running and out the door by the end of the year. There's a great team led by Global Head of Custody, Caroline Butler, Steve Wager, and also Talia Klein, who are doing fantastic work to get those services up and running.
What takes so long? In the crypto space, it's fairly responsive. It takes these businesses pop up very quickly. The fact that you guys are the oldest bank in the U.S., is that causing the delay from February of this year to December? Why does it take so long?
Look, I think, if you look at technology projects of this scale and magnitude, they're complex on multiple levels. So we're not a small bank providing a very niche service to a very small part of society. We are a global institution working with some of the largest asset managers, asset owners, and corporates around the world. So we need to be really, really sure in everything that we do. So from an operational perspective, from a technology perspective, risk and reg, and we're being very deliberate and cautious and thoughtful in everything that we do. And with that comes time.
All right, Lory, thank you so much for joining us this morning, and looking forward to seeing how BNY continues its developments into crypto.
Pleasure. Thanks for having me.
All right, that was BNY Mellon Global Director of Digital Assets and Blockchain, Lory Kehoe. Coming up, crypto markets update with FX broker Forex.com.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, April 29th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. If you've ever wondered where in the world stablecoins reign supreme, you don't have to look beyond our backyard right here in Asia. According to a CoinDesk Research Q1 review, looks like Asian exchanges such as Huobi are outpacing other stablecoin leaders like Tether and Circle's USDC when it comes to US dollar-pegged stablecoin transactions. But stablecoins have been at the center of controversy in recent years, from the Facebook-backed Diem to USDT to right here in Asia, where the crypto-friendly government of Thailand outright banned Thai-pegged stablecoins. VP of Consulting for Blocksphere in Jakarta, Pandu Sastrowardoyo, says Indonesia is taking a copacetic approach, and she thinks that's the right move.
Soon, we might need CBDCs for a lot of the countries, and including Indonesia. And this is a way to prepare for it, at least by using a digital asset class instead of just paper and fiat money.
All right, taking a look at how Bitcoin traded during Asian hours, 4 p.m. Hong Kong local time, just up over 0.25%. And in the top 10 for cryptocurrencies, Ethereum extending its record bull run, up 4.5%. And Doge is up by over 6.5% as it puts its best color on, you could say, for its upcoming Saturday Night Live hosting gig with Elon Musk. Big fan of Doge there. And a quick look at the Asian equity markets. Most indices ended positive by 4 p.m. local Hong Kong time, the end of the Asian trading day. All right, big news here in Asia. JP Morgan is partnering with Singapore's DBS Bank and state-owned investment firm Temasek to launch Partier. Naveen Mallela of JP Morgan and Han Kui Juan of DBS sat down in a Forecast News exclusive interview and told us how the banking giants are using blockchain to optimize cross-border payments.
The current model that you have for cross-border payment actually has a lot of pain points, coming from the complexity of payments flowing through multiple intermediaries along the way.
You set up new rails where banks come in and share ledgers. In this new rails, the settlement would be atomic. The debit and credit, all of that is happening instantaneously, atomically.
Well, we talked to Fireblocks, an institutional digital asset custody provider, and it thinks it could change how institutions regard crypto. Fireblocks Vice President Stephen Richardson says he's watching closely.
In this case, you're leveraging intermediaries like JP Morgan and DBS in a connected platform to now be able to move money almost instantaneously. So the idea that you can move it from, original bank or sending bank into an intermediary who then can communicate directly via blockchain with another intermediary to immediately settle those assets, I think changes the cross-border payments landscape.
Meanwhile, we could learn more about how integral crypto and blockchain is to DBS. Q1 earnings come out tomorrow from Singapore's banking giant, and no doubt we're going to be learning more about the bank's digital assets exchange for institutional investors and how it factors the growth of crypto to its own growth in the market. Forecast will be there. For a traditional bank started in 1968 by the government of Singapore, it is a sign of the crypto times. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time to take a look at Bitcoin. Trade blocks indexes are now the CoinDesk indexes. So the CoinDesk Bitcoin price XBX index is now trading at $54,000 and some change. Bitcoin is down about 1.3% over the past 24 hours, and the CoinDesk Ether price ETX index right now is at 27.73. ETH is doing pretty well, up about 3.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Forex.com Global Head of Market Research, Matt Weller in Grand Rapids, Michigan. Welcome, Matt. Would love to hear your outlook on Bitcoin. Seems to be, as I mentioned earlier in the show, trading within a range.
Yeah, thanks, Christine. So what we're seeing so far today is a pretty broad-based gain across the crypto markets. When I checked this morning, 18 of the 20 tokens in the CoinDesk 20 were trading higher. And I wanted to take a look today and highlight where we are in the broader cycle. Take that step back and see what's really likely to happen with Bitcoin and Ethereum moving forward.
All right, would love to hear your more broader outlook.
Sure. So one thing that we like to watch is essentially how long individuals have been holding on to their Bitcoins. The idea there is that people who have been holding for a long period of time are likely to continue holding. And if we look at the amount of Bitcoin held for at least 5 years, that is actually 22% of the total supply. And I like to just kind of take a step back and think about that. If you're someone who held Bitcoin for 5 years, 5 years ago, it was 2016. Bitcoin was trading at maybe $2,000, maybe less than that. As a matter of fact, you would have held through a 10,000% rise to up to 20,000, then saw a 90% drop back down to 3,000, and then, at least so far, held all the way up to about 60,000 or 65,000, where we saw a peak. So these Bitcoin, this about a quarter of the total supply, from my perspective, is essentially off the market. If you're not going to sell when it drops 90% and you're not going to sell when it rises 3,000%, it's essentially a sign that that has been taken off of the market, lowering the actual supply. And that can be a bullish sign as we see institutional demand and retail demand picking up.
But Matt, isn't some of that supply, at least a good portion of that 20% held, is the Satoshi Nakamoto's stash of Bitcoin? I mean, is that included in that calculation? I mean, we don't know if
it
Satoshi
absolutely is
on this planet.
Sure. So, and whether Satoshi is alive, but that kind of underscores the point, right? In fact, Satoshi's coins have been held for more than 10 years. So we'll see if those ever do move or hit the market. But at this point, I think traders and investors could almost consider those as off the reservation, and the real circulating supply of Bitcoin might be closer to 15 million or at the moment, maybe 13 million. And the 15 million might be more of the actual cap.
Now, of course, the big story is Ether, right? That's the big story of the year. As I mentioned earlier, it's nearly quadrupled. What do you think is driving that demand right now? Why is that one particularly hot?
Because it's useful, right? It's Bitcoin, great store of value. It sort of knocked down the door, broke the dam, if you will, to open people's eyes to cryptocurrencies. But Ether and other smart contract platforms are enabling abilities that people never had before. If you're interacting with NFTs or DeFi, I did see just this morning that the amount of capital locked in DeFi protocols crossed $65 billion, and that's up thousands of percent from where we were at the beginning of the year. So I think the world is coming around to see how useful Ether and other smart contract platforms can be, and that's really what's been driving the price higher.
So would that mean that Ether and DeFi can move independently of Bitcoin? Like, even if Bitcoin were to crash, it wouldn't necessarily bring these other coins down with it?
They can certainly move independently to an extent. I think when it comes to Bitcoin and Ethereum, they're almost the reserve assets of DeFi. So in many cases, individuals are posting those assets, getting a bit of interest on them, but also borrowing against them stable coins, other cryptocurrencies that they then subsequently go out and use. So that creates a bit of leverage in the system. And if we do see Bitcoin or Ethereum drop sharply, I do think that we'll see those correlations start to approach one again, and we'll see much of the excitement we've seen in the DeFi space may slow down as traders have to unwind. Not just traders, but individuals just using any DeFi protocol will have to unwind some of that leverage. So I don't think we've completely decoupled yet, but certainly as we're in a bull market, and I think Lawrence mentioned at the top, we've seen Ethereum quadruple so far this year, whereas Bitcoin hasn't even doubled. So certainly within the bull market, those correlations can be lower.
All right, great, Matt. Thanks for your analysis on the crypto markets. Appreciate your time.
My pleasure. Thanks.
That was Forex.com Global Head of Market Research, Matt Weller. Coming up, how Polkadot is gaining attention from big buyers, and checking in with CoinDesk's Nick Day on regulation and policy.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Digital investment firm Osprey Funds is launching the Osprey Polkadot Trust to give wealthy investors exposure to DOT, the native token on the Polkadot network. DOT has a market cap of over $31 billion and is the 8th largest cryptocurrency in the world. Joining us now to discuss is Osprey Funds founder and CEO Greg King in Fairfield, Connecticut. Welcome, Greg, to the show. Explain to us, if you could, what Polkadot is from the get-go and why you are creating a trust for DOT specifically.
Sure. People are super excited, including us, about Polkadot because, there's different ways to express it, but it's potentially the internet of blockchains, right? Polkadot is a multifunctioning platform that promises to connect all the blockchains together so they can communicate, transact value, exchange data. It's a very ambitious project, but we're super excited to bring this to market.
Greg, Polkadot is seen as an Ethereum killer. Is this a bet that Polkadot does, in fact, put Ethereum to death?
So we view part of our job as a product provider to sort of curate what's out there, right? Our first product was the Bitcoin Fund. An earlier guest said Bitcoin broke the dam. And a lot of people are focused on Bitcoin. We love Bitcoin, but what's next, right? And so Ethereum is a great project, and we have nothing against Ethereum. It's just that Polkadot seems to be next gen beyond that, and so we view ourselves as sort of a curator of the next ideas. And Polkadot, it remains to be seen sort of who's going to win that race, but I don't think it's an either or. You could see a world where both Bitcoin and Ethereum are operating within the Polkadot ecosystem and communicating with each other.
So when launching a product, low-hanging fruit would seem to be Ethereum. So what gave you the idea that there'd be a demand for a Polkadot product?
We've done our homework. We think that the demand is significant. If you look at market caps, it's still early with Polkadot. Bitcoin's obviously around $1 trillion. Ethereum's about 320 billion. Polkadot, as of this morning, is 32 billion. So it's 1/10 the size of the Ethereum market cap, and 1/33 of Bitcoin. So we think that could be an opportunity for investors who are forward thinking.
Is the ETH market for products too crowded?
I wouldn't say that. I mean, you could see an ETH product coming from us. The price has been doing very well, obviously, recently. It's just that, there's only 24 hours in the day and a finite amount of resources to bring things to market. And we're super excited to bring the Polkadot Trust out.
You've used the word curate. Is it fair to say that Polkadot was kind of your decision, that this is kind of the next big opportunity, or was there actual investor demand for Polkadot specifically?
Yes. I think the answer to both of those is yes, actually. So, we've talked to people, we have our own research and ideas. And this was at the top of our list in terms of the most compelling sort of next gen ideas. And so we wanted to focus on it next. You will see additional products from us, hopefully in a short amount of time. So stay tuned for that. But anything we bring is going to be something that we believe in. We may be right, we may be wrong, and investors need to do their own homework, obviously. But we've done a bit of research, and we're putting out the products that we think reflect a coin or a token that has a sustainable future, that has some promise, and that's potentially going places. What kind of
clients are asking for Polkadot? Just out of curiosity, is it sovereign wealth funds? Is it family offices? Is it VCs? Is it Fortune 500 companies?
I think it's a mix, just like you have with other cryptos. Everything from high net worth investors through to institutions as well. Polkadot is like all of the cryptos, accessible in different ways directly, right? What we do is put these tokens into a trust format. We will be applying to list it to gain a ticker, and hopefully that happens. And then it's more widely accessible within traditional, IRAs and brokerage accounts.
All right,
So,
Greg.
Oh no, that's all right.
All right, Greg.
Well, so will we see an Ethereum product from you guys anytime soon?
So can't comment on the pipeline, but it's definitely something we're looking at.
All right, we'll end it there. Thank you so much, Greg, for joining us this morning, and looking forward to seeing how that DOT Trust goes.
Thanks very much. Great to be here.
Right, that was Osprey Funds founder and CEO Greg King. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So we heard from the Fed making its announcement, good morning, its policy decision yesterday. They're leaving rates at near zero. During a virtual news conference, Fed Chair Jerome Powell was also asked about the spike in Doge as well as GameStop and whether there was any relation to easy money policy from the Fed. What did he have to say?
Yeah, Powell said that Fed policy could have something to do with it, but he said that markets right now are, quote, frothy. He attributed at least some of the recent GameStop and Dogecoin action to the fact that people are getting vaccinated now and the economy is starting to reopen.
Nick, are there any implications from Biden's speech on the crypto market, or is it not particularly related at this point?
I'm not sure at this point whether there will be a connection. Biden did propose a number of spending proposals. He said that Congress should get together and act on certain things like raising the minimum wage and spending more on infrastructure. Whether that has an impact on the crypto markets in the long term, I think remains to be seen. There are always concerns about inflation, but we haven't yet seen what that would look like.
So Powell and Doge, obviously, what a dream headline for any headline writer at CoinDesk. But also, there's not that much emphasis on Bitcoin being a sign of a frothy market, correct?
Yeah, that was kind of the interesting part. Is Dogecoin was the one that was asked about. This was Yahoo Finance reporter Brian Chung who asked. No mention of Bitcoin at all, as far as I can tell.
Thank you very much for the update, Nick.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. This from investor and self-proclaimed Bitcoiner Stephen Cole, tweeting, "Companies without an internet strategy had a bad time. Companies without a Bitcoin strategy will also have an even worse time." All right. Also, lots of chatter about whether or not the U.S. should start buying Bitcoin and other government entities. We'll see about that.
Sure.
All right, that's it for First Mover. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.